Forecasting the housing market is tough. This is true even in relatively stable years, where it can always be a challenge to weigh the many economic variables and psychological factors that impact the housing market to make a clear prediction. But during economic times like these, it is really difficult. I try to do it anyway, because I think it's important to share my thoughts about the housing market as an experienced analyst and real estate investor. And I also do it because I personally want to create a thesis about what I think is going to happen in the economy. And I use that to plan my own investments. But even though I think this is a very valuable tool and thing to do, I am rarely, if ever, all correct or all incorrect. Usually I get some things right, hopefully most of them in a given year, but I am almost always incorrect about a few of the predictions I make as well. And in this video, I'm going to do a little self-scoring, a year in review, if you will, of my predictions from last year to see just how well I did. I am making this video for two reasons. First and foremost, I think it's really important to be accountable for the things that you say publicly. So here is my accounting. I try hard to explain my thinking in every video that I make, and I try to be candid about when I'm wrong and when I update my ideas and change my mind. But the second reason is that I also think it's important to discuss the reasons behind the predictions that I made and why, using sort of the power of retrospect, some things were right and some things were wrong. And I see a lot of people on YouTube or elsewhere make predictions and they never really update their ideas or explain why they were wrong or why they were right. They just make these broad generalizations and stick to what they said the first time around. I don't like doing that. I like to say what I think is going to happen at a given point in time and then update my ideas based on what actually happened. So today I'm going to tell you where I was right, where I was wrong, and again, using the power of hindsight, I'm also going to explain how some of my predictions proved true while others missed the mark. Now, when we look back at last year, I made a lot of different predictions. And I'm happy to say, I think I got a few of at least the main ideas right. So let's just look back. And we actually had one of our producers go look through all the videos that I created last year and wrote down a lot of the predictions that I made. And so we picked out the themes, the things that I said consistently or said definitively, and held myself accountable. So first thing I said was about rates. Everyone wants to talk about rates. I said that rates would stay between 6 and 7%, but be very volatile in the first half of the year. All right, let's get into my 5 predictions for the 2023 summer housing market. Number 1. Mortgage rates will be volatile, but will largely remain the same and stay somewhere between 6.25% and 6.75%. I was actually correct about that. If you look at this chart, you can see that for a 30-year fixed rate mortgage, this is the blue line here, it really did stay between 6% and 7% for the first half of the year. And I'm pretty proud of that because in 2022, I got the rate question very wrong. And so I really tried hard on that one this year. And I'm glad to say for the first half of the year, I got it correct. Now that was oddly specific. I usually give ranges, but sometimes I like to just give an average of what I think. And as of this recording, that looks like it will be right on point. The year it ended in October, I'd probably have been wrong, but I did sort of get the right ideas about rates correct. And we're ending the year almost right where I thought they were going to be. As of this recording, December 18th, it is at 6.64. I said 6.7. So that is shockingly accurate. And again, I'm pretty pumped about that one because I was so wrong in 2022. Now, the other thing I said was that new listings would hit a record low. New listings, the amount of homes that are listed for sale at any given time, will be the lowest on record in July and August. The lowest they've ever been, I should say, in July and August. And for those 2 months, they will be the lowest July ever and the lowest August ever. And I don't have new listings data, back several decades. I'm using this Redfin data that just goes back to 2012. If you look at that, I would have been correct, at least in terms of our recent data. And this one honestly was kind of easy to forecast. If you looked at the trends, you could see that new listings, which is just a measurement of how many people put their property up for sale at any given time, it's been trending down for a while. And this past year, with all the economic uncertainty, with the quote unquote lock-in effect, with high interest rates, fear of a recession, it just seemed likely to continue. And so that wasn't a really bold prediction, but that one did tend to be correct. So we saw that as well. New listings were down. So now let's get to the big one that I think everyone wants to know, which is about housing prices. I said that I thought housing prices would decline between 3 and 8%. Personally, I think we're going to see negative home price growth in 2023, but I think it will be single digits. And just for the record, for everyone who said like, oh, there's going to be a crash, you said that they wouldn't crash. I said that during 2022, I didn't think prices would go down. And just for the record, they went up 2.5%. I've changed my opinion for 2023 because as a forecaster, you have to adjust and put time periods on it. So I said 2022 was going to be 2 to 7%. It was 2.5%. This year, I am saying -3 to -8% is my forecast for what's going to happen in the housing market over the course of 2023. So we'll have to, a year from now, go back and check that out. Now, I'm recording this in the middle of December, and we don't have housing market data for the last couple of months of the year. But if we extrapolate out the trends from what we've seen in 2022, it looks very likely that in 2023, we will end the year with housing prices on a national basis up somewhere around 2%. It might be 1%, it might be 3%, but it will very likely be positive. And so I was incorrect about that. I thought that we would end the year negative, modestly negative, but we wound up ending modestly positive. And let's just take a look at why that happened. Because again, I was wrong, but I think the reasons I was wrong, the reasons it behaved the way it did are what really matters because it helps us look forward into next year. When we ended last year, we were sort of in the midst of a correction. But the thing that made me feel that we weren't going to have a crash is that supply, like I said, those new listings we just looked at, those were heading downward. And when you know anything about supply and demand, you know when supply is trending downward, it sort of puts a floor on how low prices can go. And so that's why I was saying, they'll probably go down, 3 to 8% because demand's going to leave the market with super high interest rates, but supply will keep it in check. And that idea was actually true, but supply went down even more than I expected it would. I thought it would go down a bit, but demand would go down more, so prices would come down. And then I thought that they would start to come back. I made a prediction that housing prices would start to get better in the second half of the year. If I had to guess and give you my opinion, I would say that for the first half of 2023, mortgage rates are going to stay very volatile. They're going to go up and down, probably fluctuate somewhere between 6 and 7% for the next several months. But as we enter the middle of 2023 and the second half of the year, we'll probably have a better idea of what's happening with inflation, if we're in a recession and how bad it will be, and that's going to give us much more clarity about mortgage rates. This is, to me, the X factor, because if mortgage rates go down, we're probably going to see the housing market bottom in late 2023, and we'll probably get away with single-digit declines in housing prices on a national level. Again, I've said 3 to 8%, and I personally, this is just my opinion, believe that this is the most probable scenario. Look at this chart. I sort of drew out just like freeform, so this is not scientific, but I just drew with a marker. I thought prices would go down in the first half of the year more than they did. They seem to have bottomed out at around -4%. I thought they'd go to -5, -6, maybe -7, and then they would come back to maybe -3, -4, something around there. And so I sort of got this quote unquote shape right. As a data analyst, you sort of look at the shape of the trends. And I think I got the shape right, but the depth wrong. I thought it would go down further than it did and takes longer to recover than it actually did. But I think the ideas were generally right. So overall, if I had to summarize my performance last year, I'd say I got the variables right. I think I knew sort of what was going to happen with supply and demand, but I wasn't right about how big the movements in those variables were going to be. I was pretty darn close on rates, which I'm pretty surprised by. I mean, it was a well-informed prediction, but because I was so long last year, I'm delightfully surprised that. I was right about home sales volume. I didn't really get into it in this video, but I was also right about foreclosures. I've been pretty adamant for the last few years that there was not going to be a wave of foreclosures. There has not been a wave of foreclosures. And even though those are moving up a little bit, they're nowhere even close to where they were pre-pandemic. So I was right about that. So the big thing I got wrong was prices. And that's a big one. I certainly admit that. I thought the decline in the first half of the year would be steeper and take longer to recover than it did. And prices proved more resilient than I was expecting. As of this recording, and things are changing really rapidly right now, mortgage rates have jumped 100 basis points in just the last couple of weeks, which has huge implications for next year. So as of right now, middle of December, I think the most likely scenario is that we see a slight improvement in housing affordability. This could come in relatively flat housing prices, but slightly better mortgage rates. That's kind of what I'm thinking. Mortgage rates have already moved down, and I'm not one of those people who necessarily thinks we're going to see mortgage rates in in the 5s for an extended period of time next year. But I do think there's a good chance rates move from the high 7s to the low to mid 7s next year, and that could help improve affordability. As a result, we'll probably see demand pick up. And I think the million-dollar question is, will we also see supply start to pick up? There are some trends that are showing that it might happen. And if that does, we see demand tick up, we see supply start to tick up. That doesn't necessarily mean that prices will go up a lot. I think I'll get to that in a minute, but that could get sales volume to start to pick up a little bit. I was wrong about it this year, not by a huge amount, but I said negative and it was positive, which I think is a misstep on my part. But if I had to guess right now, I would say that housing prices on a national level for the next year will remain relatively flat. I don't think they're going to move very far in one direction or the other. But just with the recent trajectory of mortgage rates, I think they'll be slightly positive, right? So I think for most markets in the US, they might be flat to maybe 6% year over year is what I'm going to guess at this point. But will I be right? We will have to wait until next year to see. But what I assure you is until then, I will keep updating you. If I'm blatantly wrong, and I know in 2 months that I'm wrong, I will certainly update my forecast and let you know what's going on. And if things stay on track as I expect them to, I will keep supplying you with data that supports what I'm seeing and what I'm thinking. For BiggerPockets, my name is Dave Meyer. Thank you guys so much for watching, and I'll see you next week.